Hi, welcome. So with me I have officials from three provinces. Right here to my right is Jim Hopkins from British Columbia. In the middle is Rod Balkwill from Saskatchewan. And on the far end over there is Charles Allain from Nova Scotia. So as has been the talk a lot of today, the economy, front and center in everyone's minds. The global economy appears to be heading towards something of a slowdown, whether you think it's a full recession or not. We'll get to that later. But how are you preparing to shield your province's finances? And we'll start here with Jim.
Well, to the point, indeed, the global slowdown is impacting BC. So in our most recent quarterly report in September, we gave our outlook, an economic outlook, a haircut. Reduced the 2019 and 20 to growth rates of about 2%. And that's evident in our trade, the trade profile, the trade impacts there. We're very mindful of, though, very much in keeping with British Columbia's approach to budgeting, that we remain in surpluses. So we've scored our sixth consecutive surplus. Debt still remains affordable, and the AAA credit rating is a big part of that. Measures that we take include when we forecast our fiscal plan, we base it on an economic forecast which is below the consensus. So currently, for 2020, for example, we're 0.5% below the consensus. A 1% change in GDP in British Columbia is worth about $150 to $250 million in revenue. So there's a sort of an insulator. The other thing is that we have a lot of conservatism built into our budgets. So contingencies, forecast allowances, they add up over our 3-year plan to $2.35 billion. And that is so that we perform to the upside. That's the whole, it's almost formulaic. Our approach is to outperform our targets. We also are very mindful of wages. 1% change in the wage bill in British Columbia for all of the provincial public sector, schools, universities, hospitals, government, Crown corporations, 1% delta is worth $300 million. So the government very much focused on control, and the Minister of Finance manages that wage mandate from her desk. So we have a 2% per annum wage bill. That is fully baked into our fiscal plan. There should be no surprises on that front. 70% of all union employees have signed on. So that's an important element of our strategy to sort of keep ourselves in check.
Okay, thanks, Rod.
Thank you, Kevin. I think it was the Minister of Finance of Quebec this morning said when the economy slows down, the revenues fall, but the expenses do not. And in fact, they go up, utilization goes up. And we've, in Saskatchewan, experienced a slowdown as recently as 3 years ago. We do have a good exposure to oil and gas, and when that market went down in 14 and 15, it carried on into the economic growth of the province in 16 and 17. And with a drop in royalty revenues that we usually take in from that industry, as well as corporate income taxes, because companies weren't as profitable, that left a $1.5 billion hole in the budget. It was important for us to fix that quickly, and the way Saskatchewan has historically protected itself has been to keep taxes low and to keep debt levels low. So there is some financial flexibility to adjust when these times hit. So in 2016-17 budget, or 17-18 budget, action was taken on our consumption tax. And that's the provincial sales tax. We moved it from 5% to 6%, just one turn, and broadened the base somewhat, and that brought in another $1 billion of revenue. I won't say painlessly, but it was very effective. It did not take down the economy. It did not slow it down too much. And then that with a combination of the capacity and borrowing which we had, because in 2009 we had paid down $3 billion of debt when commodity prices were high. It gave us the ability to fund those deficits. So we think about it as having the financial flexibility, keep taxes low, and then have that ability to raise them when those times hit. So it worked in that time. Whether it comes again, yeah, it will be another trying time, and we're feeling it primarily in the present moment through the oil price and revenues. And oil is not where it was in 2014 or 15, but it isn't where we'd like it to be. So, and that's the impact of the slowing economy.
All right. And Charles?
So in Nova Scotia, we tend to have a fairly stable economy. We tend not to grow. We tend not to have the growth spikes and the lows in a recession. For instance, last recession, 2009, we had a modest GDP growth of about 0.4%. So the only other time we were negative in the last 10 years was we raised the, as Rod did in Saskatchewan, raised the provincial sales tax a couple points. And so we had negative growth kind of 2012 area, but other than that, we're very stable economy. So far, we have not had any material effect on revenues this year from the slowdown. One of our big exports is to China. That's been going gangbusters. At the margin, that worries us a little bit because should we ever have a trade war with China, it could impact our seafood exports to China, but so far we haven't seen that, and our premier maintains a very good relationship with the province of Guangdong in China. So he goes over there 2-3 times a year, and so far that's helped, I think.
Okay.
Also on the forecast side, we're quite conservative, so we have some forecast allowances, not explicit, but we're kind of forecasting roughly 1% GDP growth for the next couple of years. 3% real, but our revenues are actually forecasted to grow 2%. So we're not growing as fast as our economy. So there's a bit of a buffer in there, natural buffer. We also have some buffer in our debt service forecast. So between those, not slowing down maybe as much as the rest of the country if we do get a slowdown, and then having those natural buffers within the, not explicitly but implicitly within the budget. We should serve us well. And the government's been very fiscally conservative. So they watch, you don't get CPI on top of your last year's department expenses. You get last year's department expenses. Anything you want above that is argued for.
Okay.
So it's pretty tough fiscal management. So.
Well, I didn't hear any forecasts for recessions just yet, but I got to get you all on the question we've been asking everyone today. We'll start with Charles. What do you think are the chances of a Canadian recession in the next 12 months?
I think they're up fairly significantly. This time last year I would have said very small increase or potential, 10, 15%, but I got to think it's close to 50 now. I think the one thing that maybe everybody's kind of relying on that yield curve inversion as a recessionary predictor. I'm not sure that's going to work out as everyone expects. So, I'd put it maybe more like 40, 50%.
All right, Rod?
Yeah, I think it's 60 or 70%. It's the housing side, as some of the speakers have said, that we're pretty narrowly based. Now, if being from an oil province, if that market recovers or any kind of development can take place in that market that isn't happening now, I think that will be something that would differentiate Canada and take down the possibility of a recession quite a bit. But I think if the base case is the U.S., the Fed knows something, they're taking the action they need to, but they still could fall into a recession, Canada will have a difficult time avoiding that.
All right, Jim?
I'm inclined not to believe we are going into a recession in the next 12 months. We certainly aren't calling for it in British Columbia. I think there's lots of good foundations in the Canadian economy that'll sustain growth. We got a job market that's performing well. Got wages growing at a good pace. Inflation running at a fair level. I don't see the Bank of Canada having any need to reduce interest rates, but I think they've got extra. They have the powder there that if they have to address themselves to that situation, they can do it. So I'm inclined to be a little bit more bullish on Canada and certainly British Columbia.
All right. Well, we've heard some mention of this already tangentially up here, but another sort of part of what's weighing on the global economy is sort of these trade tensions that are happening both between Canada and China, Canada and the U.S. Let's start with Rod. How is that playing out in your province?
I shouldn't laugh. It's playing out all right, but we've had a few bouncy times. I'll say, first of all, Saskatchewan is very trade dependent. It's the largest percentage of GDP is is exported externally, internationally. Grains, fertilizer, crude oil, manufactured goods. And so we've enjoyed extremely good trade relationships with all of our countries, trading products. When the U.S. For trade issues first started to develop again towards Canada, we seemed to be immune from them. It seemed to be manufactured goods, which we're not a big player in. It seemed to be technology. But then there were tariffs put on steel under Section 232, the national security. The administration put those on. And we are a steel producer. And then there was 2 companies in the U.S. Filed to have Section 232 tariffs put on uranium, which is Saskatchewan's the 22% of world supply. So it quickly hit that we are impacted, and thankfully the steel tariffs were lifted with USMCA, and the uranium fight was disallowed by the courts in the U.S. So that's over. But then China, in the beginning of this year, canceled the export permits of grain firms that are shipping canola, which is an oilseed, a very large product in the province of Saskatchewan, and Alberta and Manitoba. And so that's 1.5 billion of exports from Saskatchewan alone to China. We continue to export all the other things, but so that came in the spring or late winter and is still yet to be resolved. And so, the overall trade situation is good, but there's these one-offs that come in. We expect this would hurt GDP in the province, not as much as you might think. It's about 0.3 or 0.5%. The products are finding their way to market some other way, and so it's a short-term thing. We think it will be resolved, but clearly, we've got a large export, industry and very large products. So when they're targeted, it's impactful, and that's what we're dealing with at this point.
Charles?
So far, the NAFTA, between NAFTA and USMCA, there hasn't been much of an effect so far. We don't have the steel exports. We don't have a big car industry. We have a fairly large tire manufacturing operation. So we have 3 plants in Nova Scotia, Michelin plants that produce heavy truck and light vehicle tires, exported all over the world. So far, touch wood again, we've been fairly lucky from the U.S. side of things, and we see the USMCA as being really more or less an extension of the NAFTA. So that should be steady as she goes. Modest effect from, potentially from the GM strike. That wouldn't be in our current numbers, but it would be a modest effect, I think, yeah.
All right, and Jim, trade wars?
British Columbia would be uniquely diversified in our trading relationships. We have about 38% of our trade goes to Asia, which is contrast to most provinces in Canada, which would have much more going to the United States. We have 50% into the U.S. In our view, Asia is a good place to have an exposure. There's a little bit of turbulence going on right now, but these are put in context over a horizon of time. Asia is a pretty strong place to be, and you guys have mentioned that you've strong relationships there as well. We've seen, as I mentioned earlier, some of that slowdown emanating largely from China. I think their economy growing at double-digit rates. It's not surprising that you'd see some correction, and so now we're forecasting that economy to grow by about a little under 6%. It's still on a huge base, though, so it's still pretty staggering growth. But we do see commodity prices down, so those are mainly what we're trading into Asia, so it's going to have, it has had its impact. But over the long haul, we see that diversification in British Columbia as being a strength and minimizing the volatility and mitigating the impact of global slowdown in the sense that there'll be one part of the world that's still performing, we can still participate. Currently, the United States is a strong economy, along with Canada, I'll say, too. But it's a good place to be, to have sort of the straddling both. And we expect, as I say, we are experiencing some of that turbulence right now, and we've reduced our economic outlook in kind, but we on the go-forward basis, we don't see it as a damning outcome.
Okay. Now, another global trend is low interest rates. We've seen a rising pile of negative yielding debt around the world. Do you have any plans to bolster issuances overseas in light of the negative rates that we're seeing in, say, Europe or Japan, Jim?
Well, this year we've been really busy in the offshore markets. 50%, over 50% of the $4.6 billion the province has borrowed has been sourced in either U.S. dollars. We just did a U.S. dollar global a few weeks ago, and or euros. So longer dated euros have been another part of our borrowing program. So they've treated British Columbia very well. We're pretty particular in the way we approach the offshore markets. We're looking for realizing a saving for the taxpayer in terms of debt service costs compared to our domestic cost of funds. And when we can see those opportunities, we'll jump on them. They don't just fall out of the trees, though. For BC, that's sometimes very difficult to orchestrate. So we value the diversification largely because it does ration some supply into the domestic market, which keeps our spread performance in check, we believe. It enhances performance. It's also a very welcome added source of liquidity for the province to have. So we're big proponents of diversification when it can make economic sense. And so about 20% of our outstanding debt has been sourced offshore.
Oh, okay. And I'll just point out that we have a chart up there of we're at around just a little less than 14 trillion of global aggregate negative yielding debt at the moment, which is that's a lot. Rod, how about your province looking?
Oh, we'd love to issue at negative yields, but we're not there yet. We haven't. Saskatchewan hasn't issued in foreign markets since 2006. Strictly Canadian domestic issues, but we're not a stranger to it. And through the 90s and into the early 2000s, all markets, Japan, U.S. Yankees, the Australia. But as our borrowing programs, through the early 2000s, we were running surpluses, so the borrowing needs were quite low, and we were funding capital expenditures out of those surpluses. So we discontinued all of those shelves, but we watch BC with very enviously. They've got a tremendous program in foreign markets, a great balance. I think it does impact domestic spreads. It's hard to measure, but we think there's something there, in addition to the ARBs that you can make just issuing in a foreign market. So we're doing some work on it, nothing this fiscal year, but one other thing that I just mentioned is that just recently, and this may disappear, but the other Supras, SSAs, and even our local pension plans in Canada are issuing in the Canadian market, which is another source of supply, I think, that competes with provincial debt. And so we need that extra place to go, to your point about liquidity as well, that we can access should the Canadian market just become unable to absorb all of the supply.
All right. Charles?
So short answer is no. We haven't recently been issuing in the U.S. market, nor do we have plans over the very near term to issue in foreign markets. We have a very small borrowing program. It's about $1.5 billion this year, $1.3 billion for the following 2 years, so it's fairly modest. Like BC, we like to borrow it in arbitrage savings, and right now it's kind of in that 10 to 15 back of domestic cost. So we don't see that opportunity coming in the near future. Again, it's that relative advantage here. We borrow through my good friend Rod here, but in the U.S. market, we might actually borrow back of Saskatchewan in the U.S. market. So it's that relative advantage that's hindering us a little bit, and we maintain a U.S. dollar shelf, so it's $1.25 billion U.S. dollar shelf, so we could come at any time, and we still have a few U.S. dollar issues outstanding, old 30-year issues that mature in the next few years. So good chance over the next few years, but not in the next year, maybe. Yeah.
All right, so one of the big issues in the election has been sort of varied approaches to climate policy and carbon taxes. I know on the stage we've got a couple of very different approaches. So I just want to see if you could say a little bit about your province's approach to the carbon tax, and in answering also how much of how important is that to your province's finances right now? So we'll start with Jim.
Well, province of British Columbia is a huge fan and proponent of carbon taxes. We were the first jurisdiction in North America to introduce carbon taxes in 2008, and the new government has introduced a plan in its 3-year fiscal plan to increase that tax from $30 per ton to $50 per ton by the end of the 3-year fiscal plan. We see, I think it speaks volumes that with that tax, notwithstanding that tax, British Columbia has enjoyed the position of leading the country among provinces in economic growth in the last 3 or 4 years, at 3.5% basically, notwithstanding the carbon tax. It hasn't interfered with the growth of the economy, nor with the fact that we've also led job creation in this country for 2 or 3 years. So we don't see it as being an economic impediment. It actually, there's other industries that can form around a carbon tax, which can be very positive. Government is a signatory, I don't believe it's a signatory, but it's definitely a proponent of the Paris Accord, and would see that as being a carbon tax as being a big part of it. In the fiscal plan, there's $900 million for its climate action agenda. Things like introducing or incentivizing industry, homeowners to have more efficient buildings, lower emission vehicles. We also have a carbon tax credit for lower income people who may have more difficulty paying that carbon tax. All told, we think it's a good place to be. You can see the province of British Columbia would have per capita the lowest sales of refined product in the country. And I think that speaks to the fact that we have a carbon tax. There's not a big incentive to lacquer on carbon purchases. So we're positively inclined to that regime.
All right, Rod, I'm imagining a slightly different approach in Saskatchewan?
Yep. So it's an important aspect of the current election, for one thing, and probably need Alberta up here to really give a good comment on it. But the approach Saskatchewan has taken, and I'll tell you right now that the provincial government is in a court case with the federal government on a couple of issues with the carbon tax. And probably one issue in the court case. The court case really is about the constitutionality of the federal government's ability to impose the tax on the provinces. And so that's what's before the courts, and I think it'll be in the Supreme Court in January or February to hear the case. Philosophically, the government of Saskatchewan does not see it as the best way to fight climate change as well. So there's some philosophical differences between it, and although, at some point there might be, it seems like there's probably is room for that in some sort of grander plan. The approach that the province of Saskatchewan has taken, being a very carbon-intensive industry, having a carbon-intensive industries such as farming and oil and gas and mining, has been regulatory and structural. So regulating methane emissions, flare gas in the oil field services sector. Farming practices have been dramatically changed through no-till, meaning seedings go direct into the ground. There's an immense amount of carbon that's released if there is tilled, and now we're down to zero till, so it's a huge carbon sink. In addition, the power utility, which is owned by the province, has committed with an agreement with the federal government to get to 50% renewable power by 2030. So that's no small feat, given that it's it was primarily coal-driven. That's the resource that is in the province. There is no hydro. So a combination of wind, solar, hydro, potential imports, which we already do, and then in addition, on the non-renewable side, converting the gas plant or coal plants to gas. So some big steps there. It's expensive. We're spending the money. We're investing in it. So it's the same end goal. The province recognizes it. It's just they're having this battle on the actual constitutionality of it, of the carbon tax. And right now it is charged. The federal government does charge it in Saskatchewan. They rebate it back through income tax returns to the population. So possibly GDP neutral for the province. We're still working on that.
All right. Thanks, and we're going to have to leave it there, but thank you all for your time.
Thank you, Kevin.